Apparently Australians are going to spend, spend, spend. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of Heise Says. I recently saw an article talking about consumer spending going up, or it's going to return and drive up the retail sector. And they made reference to the Household Spending Intention Series from the Commonwealth Bank. So I thought we would have a look at this. And I've got it up here, and I'll just zoom in so you can all see it. Let's have a read through to see what this is telling us. Because, well, I recently did a video on tax returns that will save the Australian economy, according to the RBA. The RBA, who don't seem to understand why the economy is slowing down, but nonetheless, they think these tax returns will save us. And I will link to that video up here. And I'll just write that in, right in the time right there. Now, the issue is, in that video, I asked everyone, well, what are you going to spend your money on? And like the article that was saying it would make no economic difference, most people were saying pay off debt. You know, some people were saying tax return. I earn too much money. I've never seen it. Oh, it means I pay $1,000 less on my 60 grand return or $5,000, 60 grand bill or $5,000 bill. Yeah, I'll be spending that. Clown world. So yeah, we'll see. I think most of it will go into debt reduction. So Household Spending Intention Series, a new view on Australia's spending. So however you do business or invest, knowing what's around the corner can keep you one step ahead. Okay, hopefully this is just some spin. Whether you're at the helm of a family business, a policymaker, an investor, or one of Australia's corporate enterprises, robust insights on shifting consumer spending intentions are critical for your plans for the future and determining whether it's time to ramp up or ramp down. Well, that's interesting that they make statements like this, because I mean, would you base your decisions on data like this? And what scale of business? I wonder. I think it's too big. Maybe it depends on the scale of your business or what sector you're in. CommBank's Household Spending Intention Series combines our spending data with one of Australia's one of Australia's largest financial data sources with Google Trends publicly available search activities. By connecting with advanced readings on actual spending data to intentional data, our analysts should provide an early indicator of prospective spending trends. Okay. Interesting that they're combining it with Google Trends. But does that take account of the number of spending that is done overseas? Tracked across 7 spending sectors, our analysis can offer a future lens into specific industries. Well, I'm excited. I'm excited to see this. When these sectors are looked at together, the Household Spending Intention Series provides a holistic view on the changing spending behaviors of Australians and the potential implications for the economy. So guys, I need a shot of coffee with that. I'm excited. This is going to tell us the future. Just like the futurist we had on here. So, summary. Following some initial positive signs last month, the September 29 edition of the Household Spending Intention Series, data to end August, indicates that an improvement in spending intentions is underway in Australia. The combination of income tax refunds now flowing into bank accounts and an improved housing market is driving the lift. Significantly, the Home Buying Intention Series has moved back into positive territory, and this should help drive a further improvement in retail spending intentions in the month ahead. So the premise is that because people buy more homes, they then have to fill them full of crap. So they'll go out and purchase all these consumer goods to fill up their homes. And that's driven by the insanely low, I'll zoom out here so we can see everything, the insanely low interest rates. So what we have, so this is, you can see at the bottom here, I'll scroll along. You've got home buying intentions is up, retail is up, motor vehicles steady, entertainment up, travel up, education up, health and fitness steady. Well, interesting. How many people would cut the gym membership as the first thing? So this is the dashboard. We'll have a look at each one here. Home buying spending intentions. The turn in home buying intentions is accelerating. The HSI is running at the upper end of the historic range. And the momentum behind the the momentum behind the improvement is the highest over the life of the HSI. So there you go. So there's the smooth curve. It's shot up, but look at that dive down. That dive down, and it's been flat for most of this year, and it's just shot up. Well, that's the interest rates, isn't it? The interest rates cuts. We'll see if this can be sustained. We'll see if it can be sustained. So retail spending intentions. Okay, that's you can see it there. Good. Payment of the tax rebate to households is proceeding. The lift in retail spending intentions back into positive territory is an encouraging sign that the rebate may be spent stimulating consumer activity. The turn in home buying intentions will help. So you can see here it's shot back up slightly above zero, but it's been below the zero since the beginning of the year, looks like. What do you think, guys? What do you reckon? Do you think that the assumptions make complete sense, but we'll see if it's sustained. Could this be, a lot of people are thinking we've got a dead cat bounce or, a fool's run or something with the housing sector that is shooting up slightly. It's what will sustain that continued demand? That's the question. What is pushing it up? If it's just shot up because interest rates are so artificially low that everything's more affordable, and psychologically it'll take time for people to adjust to the new reality. So they'll think, wow, that's so much cheaper. It's like when someone gives you an anchor price in negotiation. I was talking to a gentleman yesterday going, oh, we got this website that's normally $10,000 for $3,500. It was such a good deal. Now the cynic and cheap bastard that I am thinking, wow, $3,500 for a website that you could probably get done for $100 overseas. It's your frame of reference. So is that why we're seeing this? Maybe. We'll have to watch and keep looking. So travel spending intentions. The lift in travel spending intentions suggests the tax rebate boost and the turn in the housing market will impact on broader consumer spending trends. The lift also highlights the risk that some of the stimulus leaks into spending on imports. Well, I think since your data is based on Google searches, I think most of it will leak into imports. What's manufactured in Australia? There's a gentleman who sent me a Facebook comment. He'd let me know that, he got the rebate or his tax refund and then he spent it on overseas goods. You can't blame him. I have a laser scanner that I hire out in another business. And I needed to get feet for the tripod that I had. One of the feet broke off. It's my fault when I was scanning it, so I had to get them. And I went to camera shop. They didn't have it. And I said, to hell with it, I'll order it online. And I got it ordered online, spent $30. It arrived in the mail a few days ago. It's a website I wasn't too sure about because I didn't get an email saying your order's been processed, but it all came, no problem. Done. So there you go. Is there any? Could you let me know if anyone is aware of something that measures the comparison of consumer spending that's going overseas to online purchases to consumer spending that's happening here in the country? Because if this tax refund, a lot of it's heading offshore because of just importing products, what is the economic propensity? What's the value of that dollar going to have in Australia? Another gentleman said he was going to Japan. I told him to take Tim Tams with him because, it'll come back when the Japanese tourists come here and they buy up all the Tim Tams. That was from my Woolworths days, guys, in Woolies. They would buy tons of the things and take them over there. It's crazy. So health and fitness spending intentions. Health and fitness spending intentions are largely unchanged. HSI readings continue to run around average levels. Okay, well, it looks like it's starting to trend down. That's enough for other sectors to declare the housing sector is completely reset. It's booming. But here it's just unchanged. How many of you know of gyms that have shut down in your local area? That would be a good indicator as well. So here we go. This is the entertainment spending intentions. As with the lift in travel spending intentions, The improvement in the entertainment HSI suggests the tax rebate and an improving housing market are lifting spending plans more broadly. The rise in HSI is readings relent to discretionary spending is potentially an indication of improving consumer sentiment. So they're saying here, because more people intend to spend money on entertainment, more discretionary spending, it could mean that consumer confidence is going up. And the last time we looked at that here, you can see, from Westpac Economics Melbourne Institute, it was tracking up a little bit. It was tracking up. So we'll have to see if it's sustained. I'm just too cynical. It's probably what I'm exposing myself to as well, and the industry that I'm in. So education spending intentions. The picture for education-related spending intentions has not changed. The education HSI retains a solid momentum. So yeah, it's slightly going up. It kind of jumped down a little bit, but yep, annual change. So we'll have a look here. Now this is an interesting one. Motor vehicle spending intentions. Motor vehicle spending intentions remain very subdued. Vehicle spending has proved particularly susceptible to the negative wealth effect from earlier falls in dwelling prices. Now, if you're not aware, the wealth effect is when you see, you jump on your bank and they've got your portfolio and say, your house is now worth this much money. So you think, wow, I'm rich. I'm going to go borrow money against my house, or I'm just going to spend more money that I don't really have because I've got, pretend value of my house there. So you go, spend your money. That's the kind of the wealth effect. It's more prominent on housing than it is in equities, it's funny that, because you can think, wow, my silver hoard is up, so I'll go spend. It's not the same. Or my shares are skyrocketing, I'll go spend. It's not the same as the wealth effect on housing. So that's the thing where they're talking about QE, where they're buying bonds and then it's institutional investors and then they're putting that back in the equity market. Is that it won't have the same wealth effect psychologically on people as if the housing prices go up. So that's another reason why they were stimulating the hell out of the housing sector, because it had a greater wealth effect and just flowed through the rest of the economy. Is that a good thing or a bad thing? That's something to be discussed. So the first issue of our household spending intentions report from the 23rd of July 2019 can be found here. It provides a more detailed, a more robust report. So we might look at that in another episode if you're interested. But I think this is the approach. So the need to get ahead of emerging trends has never been greater. But then again, policymakers need to keep ahead of changes in demand for public goods and services if they want to keep the voters happy. Companies need to keep ahead of changes in demand for private goods and services if they want to keep their shareholders happy. Oh, wow. Keeping their shareholders happy. I thought big business was now all just about virtue signaling. Individuals need to keep ahead to maximize their personal utility. We all need early warning signs of emerging risks and issues. When peering into the future, it is essential to know where you are standing. And here the Commonwealth Bank has an advantage. The bank's business generates a significant amount of close to real-time information on how the economy is traveling. This information relates particularly to the household sector. Households are the dominant part of the economy and drive much of its activity and volatility. From that perspective, CBA is the largest financial services organization in the country with over 16 million customers. The interaction with these customers generates a vast array of data on the activities of Australian households. An ongoing sample of more than 2.5 million households who are CBA customers, for example, gives us information on income, wealth and spending trends shortly after the end of each month. CBA data measures are really coincident indicators of economic activity, but they are leading indicators in a publication sense. Even with the best data, however, economists have never been very good in measuring and incorporating intentions into their forecasts. Well, yeah, economists are notoriously bad, but maybe that just tells you about the type of economists. This whole Chicago and monetary policy approach to things. At the most basic level, the act of spending is preceded by an intention to spend. Spending money on a holiday is a good example. By the time you've decided to go where to go on TripAds, I'd never heard of that, book a flight on Webjet, chosen a holiday on TripAdvisor, topped up your money card at combank.com and decided what to do and where to go on Lonely Planet, you've scattered a fair amount of clues about your intentions to spend. Search activity is one way to track these intentions, and Google Trends provides the tools needed. By combining the up-to-the-minute data and CBA's household surveys with relevant searches from Google Trends, we have developed indicators of household purchasing intentions. So there you go. And we can see how their spending intentions formed, and it's a plug for them. So guys, what do you think? Do you think everything's going to be okay now? You don't need to worry. Home buying up, retail up, motor vehicle steady, entertainment up, travel up, education up, health and fitness steady. I wonder. Someone left a comment, the number of utes that are for sale on, what was it, on Gumtree, which is a significant number. It's another thing to look at, because who's selling the utes? Tradies in the construction game. Anyway guys, thanks for joining me for this episode of Heise Says. Please like, share and subscribe to the channel, and I'll talk to you all later. Take care.